Shares of Protean E-Gov Technologies, formerly known as NSDL e-governance infrastructure, have taken a steep hit, falling nearly 30% in just 2 trading sessions. The trigger? A May 18th announcement that the company had not been selected for the 1,435 crore rupee PAN 2.0 project floated by the Income Tax Department. This PAN 2.0 initiative is not just another contract. It's a complete revamp of the government PAN infrastructure. It involves the design, development, implementation, and maintenance of the next generation systems for PAN management. Given that Protean is one of the largest PAN service providers in the country, it was widely expected to be a natural contender. The news that it was out of the race shocked the market. Was the fall in the stock price just because of the loss of the future opportunities, or is there something more? Let's find out. Welcome to Bottom Line by Groww. In today's episode, let's analyze Protean E-Gov Technologies. Post the news announcement and the steep stock price fall, the company tried to calm nerves, stating that the development would have only a minimal and a limited impact on its operations. But the market read between the lines and did not like what it saw. In fact, brokerage houses including ICICI Securities and Equirus Securities quickly downgraded the stock, warning that the company's tax services revenues could collapse by as much as 75 to 100% over the next 2 to 3 years. That may sound extreme, but investors have good reason to be nervous. Protean delivered a 49% of its revenue from tax services in Q3 FY25, down from 61% in the first half of the fiscal year. The concern is simple. If PAN 2.0 becomes the new standard and Protean is no longer a part of that infrastructure, the company risks losing a major chunk of its revenue stream in the coming years. Adding to the uncertainty, the company's chief operating officer resigned on the 9th of May, just days before the announcement. But that development didn't help inspire confidence either. So what does Protean E-Governance Technologies do? The company has 4 business verticals. Tax services. The company issues, updates and reissues PAN cards operating TIN, FCs and PAN centers across India. With 64% share in cumulative PAN issuance, it runs over 4.42 lakh centers across 18,000 locations in all 36 states and union territories. Pension services, where it serves as the central record-keeping agency for the National Pension System and the Atal Pension Yojana, managing over 97% market share. It developed India's first digital pension infrastructure and handles IT, administration and customer service for all subscribers. Identity services, where it provides services like Aadhaar authentication, eKYC and eSign. Other services, where it participates in open digital ecosystem platforms such as ONDC and AgriStax tax services, have been the cornerstone of the business. In Q3 FY25, out of 202 crores operating revenue, 99 crores came from tax services alone. Pension services brought in 72 crore rupees, identity services contributed 24 crores, and the balance comes from the rest of the business segments. This heavy dependence on tax-related revenues means any disruption in that area significantly shakes up the overall business outlook. What does the valuation picture tell us? Interestingly, this situation also calls into question the valuation that the market had placed on the stock just a few months ago. When Protean's shares hit an all-time high of 2,150 rupees in September 2024, the company was trading at a staggering 100 times its earnings and around 60 times EV/EBITDA. That's the kind of multiple usually reserved for hyper-growth tech companies with a growth of over 50%, not firms with flat revenues and thinning margins. Look at the financials over the last few years, and the mismatch becomes clearer. The company posted a mere 3% CAGR in revenue over the past 5 years. Its net profit has declined from 124 crore rupees in FY19 to 91 crore rupees in FY25. Operating margins have eroded from 23% in FY19 to just 10% today. These are not the financials of a business that deserved such premium pricing. The stock debuted in the secondary markets in November 2023 at around 770 rupees, making a new higher high and higher lows, indicating an uptrend. But technically, the price structure began to weaken in January 2025, breaking below the key 1660 rupees support level. Since then, the stock has been making lower lows and lower highs. Following the PAN 2.0 development, the stock made a new 52-week low at Rs 982. According to the Dow theory, the stock may continue to struggle until it decisively moves above the 1480 rupee resistance levels. What's the investor's takeaway from the Protean saga? Ultimately, this correction isn't just about missing out on a government contract. It's about investors reassessing the fundamentals and valuation narrative. Protean has become a market favorite in the digital governance theme, but the PAN 2.0 outcome exposed its concentration risk and lack of diversified visibility. The stock is now trading at a much lower 46 times PE, but even that might not hold if revenues from the tax vertical dry up faster than new ones emerge. To be fair, Protean still has a valuable role to play in India's digital public infrastructure journey. Its dominance in pension record keeping and participation in emerging digital ecosystems gives it a platform to pivot. But it will need to demonstrate tangible progress in diversifying its revenue streams and reducing dependency on legacy government contracts. The market has issued a wake-up call. Now, it's up to Protean E-Gov Technologies to show that it has more to offer than just its PAN legacy. Do you own Protean e-governance in your portfolio? Share your thoughts on the company's prospects in the comment section below. For more such insights, subscribe to Bottom Line by Groww.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing. Please read the risk disclosure documents carefully before investing in equity shares, derivatives, mutual fund, and or other instruments traded on the stock exchanges.